stock buyback is when a corporation uses its cash to repurchase its own stock on the market. So instead of using that cash to give their employees a raise or using that cash to invest in plant and equipment or R&D, they decide to use that cash to buy back their stock.
Frankly, I think it's for a number of reasons, but I think some of it is because uncertainty for growing a business. A lot of long-time businesses that are very mature, they've already accelerated their growth rate at a high rate, and now they've sort of plateaued. Stock buybacks sort of make sense to them. It's one of the ways they can actually increase the price of their stocks and their shares because the market's already mature and things like that. So there's lots of reasons they do it. We've seen a growth in stock buybacks. In fact, I think in the last couple of years, more revenue, about twice as much revenue has been generated for a company by buying stocks back than by giving dividends to their shareholders. And so that's I don't want to say it's concerning, but it's definitely a trend.
So currently, as a result of the Inflation Reduction Act, a bill recently passed, we tax stock buybacks at 1%. I support President Biden's call for increasing that to 4%. And what that would mean is that when a company buys back its stock, you would tax the value of that currently at 1% and proposed 4%.
And I think the 1% excise tax was designed to raise like $74 billion over 10 years. Now, $74 billion is a big number by pretty much any measure, but $74 billion in the federal government over 10 years isn't a lot of money. And I think what we're seeing is that while it generates a lot of money, the effect it won't have, that maybe they intended, was to sort of become an incentive to not do stock buybacks, not to do buy shares back. So really there's those three things: raise revenue, punish rich people, and perhaps to persuade companies to not do buybacks, which is why I think the president's now proposing another 4% increase on the excise tax. And it's hard to say whether that'll have, what impact that would have.
Well, that's a good question. Look, I think we should try and implement it at 4% and see how that works. But there's no reason to not to think about potentially going higher than that.
I think you want to always be careful in government to not have perverse incentives for investment. One of the reasons I didn't talk about earlier that you're seeing, I think, more stock buybacks in recent years is because the federal government has punished companies and made it difficult for them to reinvest the dollars. Remembering that mature companies that do a stock buyback, they probably don't see a lot of upside to growing their company. So reinvesting, whereas a startup or a newer company, they're always reinvesting their profits so they can grow their company more, grow their markets more, find more customers, all of those things. So we don't want to have a perverse incentive.
Well, what it does is means a company's using its cash to essentially buy back stock from their investors and shareholders. And often executives use this as a mechanism to boost their own rewards, bonuses, compensation at the expense of using that cash to help reward workers who are obviously essential to the company's success. I mean, the reason a company would have valuable stock is because of the good work of the employees and, of course, the capital investments that have been made by that company.
So I don't think that's really a burden on the investors. With regard to workers, some will say, and I think Chuck Schumer has been sort of touting this, that he hates buybacks, it's bad for workers. Again, I go back to the fundamental capitalist, really theory and philosophy, and that is whatever is good for the company is good for the worker, and that there's no incentive really to hurt the worker, because you can't get more for your stock. You can't earn a dividend, particularly in an environment like we have right now, where the worker really has the leverage, because we have such a short supply of talent and workforce.
I think it's important for people to know that prior to 1982, stock buybacks were very rare. They were seen as a form of market manipulation. But back then, rules changed to provide what's called a safe harbor if stock buybacks were conducted according to certain rules. So stock buybacks have not been with us forever. We've seen a big surge in stock buybacks recently. But I do think that we need the disclosure that the SEC has recently announced. But I also think this is also a good way to raise a little bit of revenue that we can use as a people and as a country to invest in things like education, workforce training, and other national priorities.
I think it's where it should be, remembering that as long as we're talking about a tax, an increase of the excise tax of some sort, that becomes its own regulator, and that will probably determine how a CEO or how management treats their particular situation and their strategy, and obviously the age of the company. All these things factor in, and they're unique to each individual company. I don't know that we need more regulation. As I said earlier, there is authority that rests at the Department of the Treasury to oversee stock buybacks, to oversee the excise tax and the taxation. I just don't see the need for a lot more heavy-handed regulation